Welcome, everyone, and thank you for being here. Thank you for coming to my channel, and thank you to each and every one of you who have been supporting me throughout the years. It means so much to me to have you guys on board, and I cannot wait for 2025 as we have so many exciting opportunities coming up. All right, so in this video, we are going to focus on managing risk, what every strategy should include, and how to achieve your goals trading Forex. So, for those of you who need a little bit of a refresher, for those of you who are new to Forex, this should be a very good video for you guys to watch and should add a lot of perspective as to the types of things you should be focused on. All right. Before we get into the specifics, and by the way, we're going to be digging into my accounts. So, for those of you who do not know this, all of my accounts are available to the public. I am a professional trader, so I don't mind showing my accounts to the public just so you guys can see that I trade with real money and I make pretty good money as well. All right. So with that being said, the basics when it comes to risk management are as follows. Number one is going to be risk tolerance. Now, this is very important to understand because the risk tolerance for each person is going to be very different. Some people are only comfortable risking $100. Some people are comfortable risking $1,000. And this is something that you need to understand for yourself. So, regardless of how much money you're going to start with, you need to have a comfort level with how much money you are willing to risk each time you trade. And this is going to be a number where if you were to lose, $100, you don't feel devastated. You don't feel like, oh my God, I can't believe how much money I lost. So if you are risking money that has you stressed out, you're worried, you're concerned, you can't sleep, then that means you're risking too much. So you want to be in a place to where, okay, you know what? I'm not worried about $100. I'm not worried about $50. Okay. That's going to be your real risk tolerance. All right. Number two is going to be your deposit load. In short, your deposit load is telling you how much of your money you're trading with. So, if you have $1,000 account, uh, your deposit load is going to tell you, okay, you know what, you're risking 20% of your balance, 50% of your balance, and so forth. Um, your drawdown. This is very important. There are so many people that I am surprised have no idea that they should be using their drawdown in trading. The drawdown determines, how far negative you are in terms of the balance on your account. Uh, Typically, when it comes to industry standards, a 5% daily drawdown is a good number to have, or lower. If you risk more than 5% of your balance, you are starting to get into the risky area. And if you definitely get above 10%, you're probably going to be risking way too much money. All right. So these are very important things for you to be aware of. Now, also keep in mind, these are also subjective. So somebody who has a higher risk tolerance than somebody else might be comfortable with a 10% drawdown or a 20% drawdown. Now, if you're managing other people's money, they will not be comfortable with you having drawdowns that high, just so you're aware of that. Uh, so for a personal basis, whatever you're comfortable with is typically okay. All right. And then the last part of the risk management is going to be your goals. Goals are very, very important. because goals tell you if you're on track or if you're falling behind. And it's also important to understand how much money it's going to take for you to achieve your goal. So, if your goal is to make $100 per day, how much money are you willing to risk to make $100 per day? And the list goes on. And you need to start thinking this way when it comes to how you trade. If you are one of my students, I work with you on these things in our coaching sessions. So when you join my program, I do spend a lot of time working with you on your trading plan, your goals, and your structure. All right. So if you don't know how to do this for yourself, you're going to need somebody to help you with this so that you can be on track for hitting your goals. All right. And I want to break this down just a little bit more before I actually get into some real examples here, just so you guys can have more visuals. I'm a visual learner, and most people I work with are also visual learners. And please pause the video because there's going to be lots of screenshots throughout this video that you guys can save to your computer. All right. So this one is an example of what your drawdown should look like. So if you're following what the industry standards are and you have a 5% daily drawdown, if you have a $1,000 balance, this means you can risk $50 per day with a max loss size of 0.10 and stay within these limits. All right. Now let's look at deposit load. All right. So deposit load in Forex, you use the formula total margin used for open positions divided by your account equity and then multiply that by 100%. Industry norm is 10% to 20%. So keep in mind, the larger this number is, means the more of your money you're using. So there are several ways to look at this. If you have $1,000, you might feel like, you know what, I should be using at least 50% of this money to make it worth my while. And that's fine. Like I said, a lot of this is going to be subjective. Just keep in mind, the higher your drawdown is and the higher your deposit load is, means the more risk you're taking on. All right. So if you want to stay low risk, then 10 to 20% for the deposit load and 5% for the drawdown is where you want to be. In this example, we have an account size of $1,000, and we're using $200 to cover the open positions. So, okay, so when it comes to the math on the deposit load, that gives us the calculation $200 from the open positions divided by $1,000 in terms of the account equity, and then times 100% gives us 20%. 20% is fine in terms of industry norms. Now, please note the leverage you have on your account from your broker is going to have a huge factor on your deposit load. Okay, so now that we kind of got a basic understanding of what these things are, we're going to dive into one of my accounts just so we can go through this in more detail. Okay, so what you are looking at is a snapshot of all of my accounts. I am a professional trader and I do trade with real money, and you can see all of my accounts at any given time. All right. So what I want to do here is I'm going to choose this account. This one is pretty good for us to look at. And just so you guys know, if you want to be able to see all of my accounts, all you have to do is go to the left-hand side, look at more from the author, and then scroll down and see more. And then you can see all of my accounts, like I just showed you when you first got to the screen. All right. So let's look at this for a second. So we have a maximum drawdown of 1.7%. That's extremely low. We have 85% accuracy or win ratio, which is phenomenal. And let's go down to the risk. Oh, and we can see the deposit load right here. So with this particular account, the risk is extremely low. All right. I could afford to be a lot more aggressive, but because of the risk tolerance of this particular account being super low, this is one of the reasons why the numbers are so low. But I still have a lot of room to work with in regards to this account. All right. So when you go to the risk tab, you have two options, deposit load and you have drawdown. So if you hit the drawdown, you can see your drawdown, you know, since you opened the account. And as you can see here, my drawdown is fairly low. The worst day that I had with this account was right here, and it was a 1.67 drawdown. So, if this was your money and I was trading this account for you, I think you would be pretty happy with these numbers. All right, in terms of risk. And I guess that's pretty much there. And then deposit load, we can see here 2% was the max. So with this account, I do need to be a little bit more aggressive. I should be using a little bit more money with this one. So moving forward, I'm probably going to step this up to, around 10%. And that should increase my profit ratios as well. And then we have statistics, which breaks things down even further. So when you get serious about trading, you should definitely be using MQL5, My Forex Book, FX Blue. You should be using something like that that tracks these types of details, so that you can so you can understand how well you're trading. All right. And as you can see here, gold is pretty much my favorite currency pair to trade. It has the biggest risk reward ratio, and you can literally make a living just off of trading gold. And I am a big fan of the pound Japanese yen as well. And pips wise, up 6,000 pips. So I like using this data because it tells me which currency pairs that I should also be focused on. So I probably should stay away from the US dollar Japanese yen based off of this information because I'm not performing that well. And I should probably trade the Australian US dollar more because I've been doing pretty well with this currency pair. So when I look at this data, I can see what areas I need to improve on. So I need to trade the Australian US dollar more. I probably need to take a step back from the US dollar Japanese yen, and I should probably trade the Euro US dollar more, and I should probably trade the pound Japanese yen more. And I should be able to increase my profits that way. All right. So these are the types of things I spend a lot of time on when it comes to my risk management, when it comes to my goals, and when it comes to pretty much everything that I'm working on. All right. So now what we're going to do is jump into what every strategy should include. So when it comes to what every strategy should include, you should be able to track volumes, momentum, identify the trend, and determine who is in control, whether it's the buyers or the sellers. There's a million indicators that you can use for these things, but you just need to make sure you're able to do that. When you join my program, I of course teach you how to do all of those things as you're learning how to trade Forex. All right. So what we're going to do now is jump into trading view, and I'm going to show you a few of these things. Okay, so when it comes to volumes, there are several different things you can use to track volumes. For me, I like using a volume profile on TradingView, and then on my MetaTrader 4, I like looking at the MACD, and I also have a buyers versus sellers indicator. Additionally, you guys can also use footprint charts. All right. Now, one of the things that I want people to start learning and getting used to doing is researching the indicators that you guys are using. All right. So, when it comes to indicators that I'm learning, I always go here. And then when I go to the technicals, if you hit the question mark, the description is going to tell you every single thing that you need to know about that indicator, what types of conditions it's meant for, how you should use it, what you should be looking for. It gives you everything you need to know. This is what professional traders do. All right. Professional traders do not guess or wing it. All right. So professional traders research, get the knowledge, and then they're able to apply it. And that's what I want you guys to start getting into the habit of doing when you want to learn something new. All right. And the volume profile is really helpful. You have the point of control lines, which tells you where the majority of the trading volume is going to be. So the fact that we have a nice distance between where the current price is at right now at 156.997 is going to tell us, the market is going to push the price up to this area at some point. So this actually makes it a very good time to buy. All right. Now, when it comes to momentum, we have the CCI, and I have the CCI right here. We also have the stochastic momentum index, which I have right here. And pretty much any oscillator um, is going to track momentum. All right. So it's very important that you guys have at least one of these indicators so that you can see if the momentum is bullish or if you can see if the momentum is bearish. The next thing you want to do is be able to identify the trend. So when it comes to identifying the trend, we have Bollinger Bands. We have the average directional movement index indicator, also known as ADX. You can also analyze the price action on the candles, and you can use breakup structure and change of character to identify trends. All right. I don't want to dive too much into each of these indicators. I do have videos on all of them. Okay, so for those of you who want to go into more details on each of these indicators, you can do that on my YouTube channel. So if you go to my YouTube channel, you can scroll down to where you see the playlists, Forex tutorials. And if you view the full playlists, you'll be able to see all of my videos. And there's tons of them. So these videos break down all the indicators that I use and tons of techniques and strategies. So if you focus on the more recent ones, so like the volume profile, technical pattern trading, Forex indicators that really work. Uh, this is the more current stuff that I'm using. And also, uh, these top two videos are also very helpful. All right. So I strongly recommend for those of you who are like, you know what, I need more information on this, you can go here and eat your heart out. Okay. So now for this last part, we're going to dive into determining who is in control. So for this, I use fair value gaps. I use the buyers versus sellers indicator. I do not use footprint charts, but others do. Footprint charts are available on TradingView, and they are fairly simple to use. I just don't think they are necessary since I have my buyers versus sellers indicator. And then you have supply and demand. So what we're looking at here is one of my setups on my MetaTrader 4. You can see the buyers versus sellers indicator in the upper right hand corner. And this tells me who's in control. I can see how many buyers there are in each time frame compared to how many sellers. And it's pretty straightforward. If you use a footprint chart, it basically tells you the same information. All right. And then supply and demand, we can read that with the candles and fair value gaps. I have my setup on TradingView that identifies that. And this is pretty much my setup. So earlier, you guys saw my setup on TradingView, which is what I use most of the time. And then before I place my trades, I use my setup on MetaTrader 4 to be my last review before I place my trades. And that pretty much covers it for this video. Make sure you check the description for all the links to all the different things that I was discussing. Like if you want the buyers versus sellers indicator, if you want to look at my accounts from MQL5, so you can see, my trade history and anything else that was relevant will be in the description. If there was something else that you needed to know, make sure you reach out to me and I will be more than happy to help you. All right. Thank you for checking out this video. Happy New Year and let's have a blessed 2025. And thank you for being with me. Take it easy.